What's up everyone, my name is Coleman, and today, in this video, I'm going to be talking about a stock that is currently one of the hottest stocks in the stock market, and that is ContextLogic, also known as Wish, ticker symbol WISH. Although it's down nearly 60% from its peak in January, it's risen nearly 70% in the past month, as many retail investors have flooded into this stock. So today, I want to take a step back and break down the company and go over what people are seeing with Wish. First, I'll go over the company, their history, and what they do. Next, I'll take a look at their financials. Third, I'll talk about why people like the company and the bullish argument. And finally, we'll take a look at the bearish argument with Wish and the risks with this company. Plus, I'll get into what I'm doing and whether I plan on buying this company or if this is a pass for me. If you like the video and find it helpful at any time, hit the like button since it really helps out the channel, and let's get right into it. So what is Wish and what does their company do? Well, Wish is an online e-commerce platform that connects buyers with sellers. So they're often compared to an Amazon or eBay, although I think their business is a little different. Wish tries to offer a very personalized and entertaining user experience, coupled with sellers that offer a lot of categories and products. What's unique is that Wish promotes visual shopping over text-based searches. Over 70% of the sales on the platform do not involve a search and instead come from personalized browsing. They do this by providing engaging, image-rich, highly personalized product feed that their customers will be interested in. Users view this content similar to social media, where they can scroll through their feed. Something important to know is that Wish's platform relies on data and algorithms. They track every click a user has on their platform and then personalizes each user's content based on their interactions. As the company grows, they accumulate more data, which creates a better user experience as users see more relevant products. Now, although Wish has a unique discovery-based shopping experience, their value proposition for users is that they make e-commerce affordable, accessible, and everywhere. The median annual household income of a Wish buyer is about $50,000 a year, and the company is focused on providing affordable products to people who are value conscious. For example, they sell shoes for $18, Apple Watch knockoffs for $23, and many other products for less than you'd expect to pay somewhere else. They're able to do this because most of their sellers are based in China, where they can provide very competitively priced products. Plus, products come straight from the factory to your doorstep, which erases the middleman and decreases costs. There have also been many reports of counterfeit products on their site, and these are obviously going to be cheaper than real products. Products are usually shipped from China, and they take anywhere from 2 to 4 weeks to arrive, so shipping times aren't fast. Because of all of this, I would consider Wish to be somewhat similar to AliExpress, and they've sometimes even been called the online dollar store. Wish is also a mobile-first platform, and any consumer around the world can access their platform on a mobile device. Over 90% of their user activity and purchases occur on their mobile app. Additionally, Wish makes their platform accessible in 40 different languages and provides country-specific payment methods. That said, 46% of Wish's revenue comes from Europe and 40% comes from North America, while the rest comes from Africa and the rest of the world. They make money from 3 different services. Core Marketplace is where they generate 72% of their revenue. This comes from commission fees collected when a user purchases a merchant's product. 20% of their revenue comes from logistics. This service involves the transportation and delivery of a merchant's product to the user. Merchants are the ones that pay for this service. Last year, revenue from this segment grew by 275%. Finally, Product Boost makes up 8% of their revenue. This revenue is when sellers promote their products on Wish's platform. So sellers can pay to display their products in preferential locations within the app. All of this isn't exactly the path they started on though. The company was founded in 2010 by Peter Solcheski, a former Google engineer who is currently their CEO. He left Google in 2009 and started writing code for software that could predict someone's interests based on their browsing behavior, then match that interest to a product or advertisement. The goal was to optimize the online ad space. He called the system ContextLogic, which he named the company after. Shortly after, ContextLogic raised $1.7 million from a group of well-known individuals. Palantir co-founder Joe Lonsdale and YouTube co-founder Steve Chen were two of the most notable names. According to Yahoo co-founder Jerry Yang, their plan was to compete with Google on AdWords in Korea or something crazy like that, although he said their technology was good. About 8 months later, while having lunch with Jerry Yang and Joe Lonsdale, Solcheski decided not to go this route and instead became convinced that he needed to apply the Google strategy of tracking every interaction to e-commerce. So he brought in one of his friends, Danny Zhang, to help execute this. In 2011, they launched Wishwell.me. This allowed users to browse products curated by Wish and then add them to lists, but they didn't actually sell any products. This concept took off and Wish accumulated tens of thousands of users. So Wish contacted eBay and Amazon sellers and offered them access to a group of ready buyers, but only if the seller took 10 to 20% off the price they were selling their products elsewhere. Wish began listing their products directly on its app, and they turned into an e-commerce site. Over time, sales exploded as the site began generating even more interest. During this entire time period after 2010, Solcheski declined multiple offers to sell the company. In 2011, Facebook offered $20 million to integrate ContextLogic into its ad system. And in 2016, he declined another offer from Amazon after meeting with Jeff Bezos. This move paid off, and in 2019, Wish was the third largest e-commerce marketplace in the United States based on sales. According to data provider Sensor Tower, Wish's mobile app has been the most downloaded global shopping app since 2017. Today, Wish has a market cap of about $8 billion. As a company, their platform has over 550,000 merchants and over 100 million monthly active users in over 100 countries. So they've grown to be a significant player in the e-commerce space. So what do their financials look like? Well, Wish just went public in late 2020, so we don't have too many years worth of financials, but let's take a look at the numbers that we do have. Since 2017, they've grown revenues by 10% a year or more every year. During this time, revenue has increased from $1.1 billion to $2.5 billion. As you can see, they've had a pretty steady revenue increase over the past few years, which I like to see. Moving down, they currently have gross margins of 62.7%, which is pretty strong. That said, those have been declining every year. Just a few years ago, they were at 84%. In their most recent conference call, their CFO said they expect to drive steady gross margin expansion over time with a long-term target of 70 to 75% as the logistics business begins to achieve economies of scale and product boost accelerates. So they seem optimistic that the decline in margins is just short-term. We can also see that last year they spent $2 billion on selling, general, and administrative expenses. Most of that was spent on sales and marketing. This resulted in an operating income loss of $700 million last year, which was the largest loss on record. Even with those losses, they're sitting on $1.6 billion on cash and equivalents, which is a ton for an $8 billion company. Although they did raise over $1 billion from their IPO, so that's something to keep in mind. They also only have $48 million of debt, so they're currently in a strong financial position. If we divide their $1.9 billion of total current assets by their $1 billion of total current liabilities, we get a current ratio of 1.86, which is strong. Last year, they lost only $2 million in free cash flow, and that number's been improving since 2017. Although in the past 12 months, they've lost about $227 million in free cash flow due to an increased operating income loss. Overall, their financials are kind of a mixed bag. Some of the numbers are pretty strong, some aren't, while some may look better because they've recently raised a bunch of money from going public. So what are some of the bullish arguments with Wish that have caused the stock to skyrocket in the past month? Well, although some people have bought this stock because it's shorted and think it could get squeezed, there are many shareholders who have bought because they believe in the company, so that's what I want to go over. One of the common bullish points around Wish is their valuation, especially compared to its competitors. Wish isn't earning any money right now, so we can't compare them on a price to earnings or price to earnings growth basis, but one metric commonly used is their price to sales. This is a company's valuation compared to its revenue. Wish currently trades at a price to sales of 3, which is lower than all of their competitors. Amazon trades at a price to sales of 4.2, Alibaba trades at a price to sales of 5.5, eBay's is 4, and Poshmark's is 11.6. When we account for growth and look at forward price to sales, Wish's is 2.2, which is again lower than all of its competitors. The same is true for metrics like EV to revenue and forward EV to revenue. And this is even after the recent run-up in their stock price. So if this stock were valued similar to its competitors based on these metrics, it'd give the stock around a 25 to 50% upside from its current price, which is why valuation is one of the top reasons people like this stock. Another area where people are optimistic is with their growth. Wish is projected to grow revenue 30% this year and about 15% next year, which is pretty good. Although there are many avenues the company potentially has room to grow, both their logistics and user growth seem interesting. Last year, logistics revenue grew by 275%, and in the past year, it's grown by 338%. In their recent conference call, their CEO said multiple times that they're very excited about this part of their business. So this could be a continued area of growth with Wish. Increasing user growth also seems interesting, and there are a couple of aspects to this. One is getting more users on the platform, and two is increasing engagement with users they already have. For example, their average revenue per active buyer has increased almost every year, so there's opportunity for them to grow if they continue to add users and scale up the users they already have. Analyst estimates also have many people excited about this company. Take TipRanks, for example, where there are 5 analysts who cover the company. Out of those 5, the average 12-month price target for Wish is $18.60, which is much higher than their current price of about $13 to $14 a share. Finally, I want to mention another interesting thing I feel went under the radar, and that involves a tweet sent out by one of their early investors. Just a few weeks ago, Joe Lonsdale sent out a tweet that said although there are regulations on what he can say, he thought their latest numbers were misunderstood, and then said, quote, "We're gonna crush the shorts. I am extremely bullish." Now whether he's right remains to be seen, but it's definitely interesting for someone that notable to make a statement like that. Now there are also other bullish points people have, such as their strong management team and notable institutional holders like Peter Thiel, but I wanted to touch on some of the main bullish points in this section. So what is the bearish case with Wish, and what am I doing with this company? The first bearish point is that there is significant competition in the e-commerce space, especially from very established companies. They have to compete with massive companies like Amazon, Alibaba, and eBay, while even Facebook is getting into this space too. These companies are profitable and very well known. Although Wish has a different style of e-commerce, if it continues to work, it's only a matter of time until these companies launch similar platforms. So having to compete against these companies could put a lot of pressure on Wish over the coming years. Now, one of the most common bearish points brought up is that Wish spends a ton of money on sales and marketing, or S&M, and they've yet to prove that they can operate profitably. In 2020, 67% of their revenue was spent on S&M, which is very high, and because of that, they continue to lose a lot of money. This is because right now, the company is more focused on growth rather than profitability. But the concern is that if they slow S&M spending, their growth might also slow. That said, they're targeting long-term S&M as a percentage of their revenue to be between 40 and 45%, with EBITDA margins between 20 to 30%. Although these projections are much better than their current numbers, it's still somewhat unproven how well the company will continue to grow if S&M gets slowed down. Another concern with Wish is their reputation. Because they have so many independent sellers on their platform, quality control can be difficult. Wish has been frequently criticized for listing poor quality or counterfeit products on their platform. There have also been instances where sellers don't send products or make up fake reviews. Customers have also complained about a lack of communication from the sellers. All of this has caused some people to consider Wish a discount site that sells scammy and cheap products. This obviously hurts their reputation, especially given the reputation of some of the companies they have to compete against. In order to clean this up, Wish did hire Connie Chang, who's a former Facebook community manager. So Wish does recognize that this is a problem, and they're trying to improve in this area. Now there are other bearish points with Wish, such as their reliance on China, which exposes them to tariff risks. Plus, other people are concerned about how much growth they actually have left. They're also currently in a class action lawsuit, but I don't know too much about that, so I don't want to comment much on that. Either way, those are some of the main bearish points around Wish. So what am I doing with this company? Well, for me, right now, I'm not buying Wish, but I'm certainly not writing them off. I like the industry they operate in, plus I understand who they're trying to target as customers, and I think it makes sense. They're also growing their logistics business, which seems like an interesting opportunity for them, and I do like the valuation they trade at compared to their competitors. Although some of that valuation is probably justified, given that they're the only company out of that bunch that's not yet profitable. I also thought the Joe Lonsdale tweet was very interesting, and it really got my attention. That said, the main concern I have right now with Wish is whether they'll still continue to capture market share if they back off S&M spending. Although they believe they will based on their projections, it's still relatively unproven. So I'm very interested in seeing how much they continue to grow as they back off S&M spending. I also want to keep an eye out on the declining margins to make sure they don't continue to fall. Even though I'm not buying this company right now, I'm watching them very closely because I want to see how their business continues to progress and if any of my concerns begin to go away. And if some of my concerns go away, or the price falls back to that $8 level, I think it'd be very interesting to me. Either way, hopefully you liked this video, and hopefully I was able to give a relatively balanced view of the company. If you liked the video, don't forget to hit the like button, and if you want to see more videos like this one, please subscribe down below and hit the notification bell. Thank you so much for watching, and I'll see you in the next one.